what is the tax ramification of selling marijuana? And in this case, it's medical marijuana. In medical marijuana, the reportable rules, 61A, says you got to report all income from no matter what sources. I don't care if it's an illegal or an illegal activity, you've got to report it. The problem with marijuana is 280 Cap E. You got to report the gross and you don't get any deductions. Whoa, would that be nasty? But we have a series of court cases that said there is some deduction that is allowed. And that is at least for the cost of goods sold, the above the line. You're not going to get operating costs, but you're going to get the cost of goods sold. So the question is why? In the states, it's not illegal. I think more than half the states now allow medical marijuana, and I think it's like 6 or so states allow recreational marijuana in the state level. Reason is that it is considered illegal activity is at the federal level. It's a class 1 drug, that's an illegal activity, and therefore 280 Cap E applies. And on the federal return, maybe on the state return, you get all of your expenses. And until such time as the federal government or Congress rules that marijuana is not a class 1 drug, we can deduct the cost of goods sold because we have court cases. We can't deduct the selling costs and the travel and the entertainment and the other below the cost of goods sold line deduction. Now, if you're a producer, you do get to deduct as cost of goods sold the direct costs to grow the marijuana. Some types of indirect costs are above the line, part of cost of goods sold. If you're a seller of it, now all of a sudden it's just the cost of the purchase, but your marketing costs, your other type of costs are not going to end up being allowed. So there's a case called Jason Beck that tells you even types of capital losses aren't going to end up being deductible. In other words, in the marijuana field, we're trying to put as much up into the cost of goods sold and the least amount into the operating costs. We're going to have some fairly sophisticated records to whether you're the grower or the seller. That's what the rules are in reporting the income and expenses of medical marijuana. Another case you might want to take a look at is Olive. Olive is really interesting in that he has really bad books. It's a cash base, it's a cash business in it. And he was the owner of the Vapor Room. Would you just not like to have a client where the name of the Vapor Room, I kind of suspect the IRS could figure that out fairly quickly. He didn't have any records at all. And the court said in Olive, wait a minute, he buys and sells marijuana. IRS, I know he's got bad records, but you've got to allow him at least some above the line cost of goods sold deduction. And they estimated it. It's under what's called the Cohan rule. And the Cohan is a very basic tax law that says it is only fair that. And what the court said, wait a minute, he sold marijuana, so he must have bought it. It's only fair that he gets some cost of goods sold, even with bad records. The last thing that I want to talk to you about is because they are dealing, that your medical marijuana or recreational marijuana business is dealing almost exclusively in cash. What do you do about payroll? How does the business deposit the payroll tax that they collect and have to pay on their employees? And what we have given you is a couple of links. Banks, when you're supposed to take all payroll deposits and take it to the bank in a timely manner, same day, within 3 days. To do that, if a bank finds out that your client is involved in the sale of an illegal activity, they won't take the money. And the IRS doesn't have the capacity for us to do on a daily basis, take payroll withholding and let the medical marijuana business take it to the Internal Revenue Service. So the IRS does have certain procedures, and you want to Google unbanked business deposits. We give you some guidance to this, and the IRS will help you on this one, but they had to provide some way for these type of companies who are dealing in cash to pay the payroll tax withholding in cash, and it gets to the Internal Revenue Service. Bank just simply won't do that.